Good afternoon. This is Keith Brown in Moultrie, Georgia with some closing commodity commentary for Wednesday. It's about almost 4 o'clock Eastern time, running a little late today. Markets are all in murky waters to us. Cotton market today took another steep nosedive, but then came back and closed slightly lower. But of course, a bull market's one that doesn't close slightly lower. It needs to get up and get going. There's big resistance around the 77.50 area. If we could ever take that out, I think the market would try to progress higher. But there's so many fundamentals stacked up against the cotton market going higher, but yet it hangs up here. So it's a little bit of a conundrum, if you will. We are hearing that the crop in India may get reduced a couple of 3 million bales. I think that helps. And of course, a week from today, we have the supply-demand numbers out. We don't see anything there that would really boost the price of cotton. I think they'll raise the U.S. crop some. They may cut U.S. exports. No reason to lower global carryout. Of course, they jacked that up to 75 million bales or so on the last number. So nothing there. Corn today, when you look at the grains, they just look a little weary. I think if the grains go much higher, they'll see tremendous demand destruction. But if they break, I think they'll see some demand emerge. So they're sort of somewhat caught in limbo, and they're beginning to build that sort of seesaw pattern. Corn down today 17 cents. Actually, we think had a little downside breakout. So corn could start to see a little setback in here to us. I think longer term, though, as tight as it is, corn probably will come back up and make new highs somewhere maybe in the early winter of next year. Soybeans today also look a little weary. They closed down about 20 cents. November beans out to around 17.45 area. Beans for next year also down somewhat, around 13 and a half. And again, I think as part of the lull as we start to enter harvest and assess what rains that Isaac may have been beneficial or detrimental to the crop. And again, supply-demand numbers coming out next week, and I'm sure we'll start to see guesses on those pretty quick. And perhaps the corn number even comes in lower. But you know, the last report for corn was bullish, and the market went down. And with a high that day was 8.49. We have not taken that out. So the market's got some it's got some contemplating to do, and certainly we could see a retrenchment in the market as maybe specs and funds sort of exit this thing, you know, ahead of the upcoming election, which is not that far away, but somewhat away. Fuel today down a little bit because of the higher dollar, and of course, we read today, incredibly, this is incredible to us, that one of the number one exports out of the United States is distillate products. In other words, we are shipping more gasoline out of this country. That at a time when demand allegedly is down, although gasoline's $4 a gallon. So go figure, as they say. At any rate, we'll be on here tomorrow for you. If you have any questions or comments, give us a call, 1-800-910-1910. Thanks for listening.